So hello everyone and welcome back to the amazing session that we are going to have about test your knowledge questions of our ICAI module, and today we are going to take chapter number 10, that is accounts, records and e-way bill. So let's see the first question. Mala Services Limited is a supplier of management consultancy services registered in Haryana. So it's a case of management consultancy services. It has approached you to ascertain the period for which the books of accounts or records are to be maintained. So this is a theoretical question. Okay. So books and accounts and records are to be maintained for a period of 72 months, and if there is any appeal, revision or any proceeding going on, then the records need to be maintained for up to 1 year from the date of the said appeal, revision or prosecution, whatever is going on. So coming to the answer, Section 36 stipulates that every registered person required to keep maintain books of accounts of other records in accordance with provisions of subsection 1 of section 35 shall retain them until the expiry of 72 months from the date of furnishing of annual return of the pertaining such accounts and records. So this you have to remember, okay, 72 months, expiry of 72 months, sorry, expiry of 72 months from the date of furnishing of annual return of the year pertaining to such records and accounts and records. Then next, the thing which I told you about appeals and revision. Okay. So however, a registered person who is a party to an appeal or revision or any other proceedings before any appellate tribunal, okay, any proceedings before any appellate tribunal or revisional authority or appellate tribunal or court, okay, appellate authority, revisional authority, appellate tribunal or court, if any of your proceedings are going on amongst these four authorities, then whether filed by him or by the commissioner, okay, so it is irrelevant if the appeal or revision is filed by the registered person himself or by the commissioner, or is under investigation for an offence under chapter XIX, shall retain the books of account and other records pertaining to the subject matter of such appeal or revision of proceedings or investigation for a period of 1 year after final disposal. See, the point that you need to remember here is that it is after final disposal, okay? It is after final disposal of such appeal or revision of proceedings or investigation for the specified period, whichever is later. So either 72 months, okay, from the year from the due date of furnishing annual return for the year pertaining to such accounts or records, and in case of appeals or revisions, after 1 year from the final disposal of such appeal or revision, and you have to check both, and whichever is later, up to that date you will keep the records and accounts of that particular entity. Okay. Now question number 2. See, SL Groups has started making taxable supplies and gets registered under GST law. You are required to advise it about the accounts and records to be maintained as per section 35(1). This is a purely theoretical question. See, you will have to remember this, okay? This is purely theoretical question. So these six things you have to remember: production or manufacture of goods, inward and outward supply of goods or services or both, stock of goods, ITC availed, output tax payable and paid, and such other particulars as may be prescribed. This is purely theoretical question. There is nothing to understand in this. You have to remember these 6 points. Okay. Now question number 3. Swad restaurant has opted for composition scheme. Okay, so this is a question regarding to composition scheme. In the current financial year, discuss the records which are not to be maintained by a supplier opting for composition scheme. So again, this is a theoretical question. You will have to remember the points. Okay, so the question is saying that which records are not required to be maintained by a supplier who is opting for composition scheme. Okay, so there are two things that are not required to be maintained as per rule 56 2 and 4. So what are these two things? Sorry. See, stock of goods, accounts of stock in respect of goods received and supplied by him. So you have to maintain, you are not supposed to maintain your stock of goods, and you are not supposed to maintain your details of tax. Accounts of stock in respect of goods received and supplied by him. Okay, goods received and supplied by him, and such accounts shall contain particulars of the opening balance, receipt, supply, goods lost, stolen, destroyed, written off or disposed of by way of gift or free sample, and the balance of stock including raw materials, finished goods, scrap and wastage thereof. So in case you are opting for a composition scheme, you are not supposed to maintain the stock of goods, and it includes everything like your goods received, your goods supplied, your receipts, supply, goods lost, stolen, destroyed, written off or disposed by way of gift or free samples, and balance of stock including your raw materials, finished goods, scrap and wastage. The second thing, the records which you are not supposed to maintain if you are opting for composition scheme, is details of tax. Okay, so account containing the details of tax payable. So whatever tax is payable, here you have to consider only your GST taxes. Okay, so whatever your GST taxes are payable, whether it is your tax collected, whether it is your input tax credit, whether it is your tax liability that is to be paid, or whether it is any tax to be payable under the reverse charge mechanism, along with all the tax invoices, the credit notes, debit notes, delivery challan issued or received during any tax period. So you are not supposed to maintain any of these if you are opting for composition scheme. Moving to question number 4. See what it says. ABC Manufacturers Limited engages Raghav and Sons as an agent to sell goods on its behalf, wherein the invoice for supply or procurement on behalf of ABC Manufacturers is issued by Raghav and Sons in its own name. So this is a case of agent and principal, wherein the principal is issuing goods to an agent to sell on its own behalf in his own name. Okay. So for the purpose, ABC Manufacturers Limited has supplied the goods to Raghav and Sons located in Haryana. So we have to enumerate the accounts required to be maintained. Again, this is a theoretical question and you need to remember the points. Okay. Nowadays, ICAI is asking more of theoretical questions, as can be seen in FR paper of January 2026. So expect such kind of questions also, and it's better that you remember them. And these are very simple. If by chance you are getting such easy questions, then it is really very easy to score full marks. Okay, so remember that. Now see, as per rule 56.1, sorry 56.11, what it says, that every agent shall maintain accounts depicting particulars of authorization received by him from each principal to receive or supply goods or services on behalf of such principal separately. So you have to maintain separate records for each principal. Okay, so if you are say taking the goods, and if you are selling on behalf of 10 principals, then you have to maintain each principal's records separately. Okay, you have to maintain the particulars of authorization received by you from each principal to receive or supply the goods or services on behalf of such principal. Then you have to maintain particulars including description, value and quantity. So what description of goods you have received, what is the value and what is the quantity of goods or services, again on behalf of every principal. So for every principal you will be maintaining separate records for the same. Okay, then you have to maintain particulars including description, value and quantity wherever applicable of goods or services supplied on behalf of every principal. So whatever goods or services you are receiving or you are supplying on behalf of the principal, for every such principal you have to maintain the records including description, value and quantity of the goods or services involved. And then last one is, you have to maintain details of accounts furnished to every principal. Okay, then you also have to maintain tax paid on receipts or supply of goods or services affected on behalf of every principal. So whatever taxes you are paying on receipts or supply of such goods or services on behalf of such principal, those details also you are supposed to maintain. Now question number 5. Siddhi Toys manufacturer registered in Punjab sold electronic toys to a retail seller in Gujarat at a value of 48,000 excluding GST leviable at 18%. It wants to send the consignment of such toys to the retail seller in Gujarat. You are required to advise Sindhi Toys manufacturers on following issues. First one says whether e-way bill is mandatorily required to be generated on movement of such goods. So for this, what we will check? We will check the value of consignment value. Remember, it is value of consignment. Okay, it is value of consignment. Okay, you have to always check the value of consignment. It should be exceeding 50k. And your value of consignment will include GST amount. You can note down, if you want to note down this point, that you have to check the value of consignment. The value should be more than 50,000 and it is inclusive of your GST amount if stated. Then if yes, who is required to generate the e-way bill? So always e-way bill will be generated by the person making the transport or making the causing the movement of goods. And what will be the consequences for non-issuance? So in case you are not meeting the this issuance mandate, then you will be liable to pay a penalty of rupees 10,000 or the tax evaded. Then one more thing is there, that your entire this transport vehicle along with the goods involved can be detained or seized. Let's see the answer. So here there are 3-4 points that you need to remember. Okay, see. Rule 138.1 provides that e-way bill is mandatorily required to be generated if the goods are moved inter alia in relation to supply and the consignment value exceeds 50,000. Okay, so you have to remember consignment value 50,000 if the goods are moved in relation to supply. Then further, what it says, explanation 2 of the rule stipulates that consignment value of goods shall be value determined in accordance with the provisions of section 15, declared in an invoice, a bill of supply or a delivery challan as the case may be issued in respect of said consignment, and also includes CGST, SGST, UTGST, IGST and cess charged if any in the document, and shall exclude the value of exempt supply of goods where the invoice is issued in respect of both exempt and taxable supply of goods. So see, what you have to remember, that whatever is your declared value in the invoice, including your CGST, SGST, IGST and UTGST if charged, and it shall exclude the value of your exempt supply of goods. So in case you are sending a consignment including your taxable goods and your exempt goods, then in such case you will only consider the value of your taxable goods for checking whether e-way bill is to be issued or not. So see here, the consignment value we will have to find out. We were given that it is goods having value of 48,000 excluding GST. Okay, so we will have to calculate the value including GST, which comes out to be 56,640. So now further what it says, since the movement of goods in relation to supply of goods and consignment value exceeds 50,000. Okay, so one of the conditions was that it should be exceeding my 50,000 value, and here it is exceeding. So in this case, e-way bill is mandatorily required to be issued. Now moving on to the second part of the question, what it says, that who will be issuing my e-way bill. Okay, so an e-way bill contains two parts, namely part A. So there are two parts. Part A to be furnished by the registered person who is causing movement of goods of consignment value exceeding 50,000, and you have part B, which includes your transport details. It is to be furnished by the person who is transporting the goods. Whether goods are transported by the registered person as a consignor or the recipient of supply as the consignee, whether in his own conveyance or a hired one or a public conveyance by road, the said person shall generate the e-way bill on the common portal after furnishing information in part B. Whether goods are transported by railways or by air vessels, the e-way bill shall be generated by the registered person being the supplier of the or the recipient, who shall either before or after commencement of movement furnish on the common portal the information in part B. Okay, then what it says further. Whether goods are handed over to a transporter for transportation by road, the registered person shall furnish information related to the transporter on the common portal, and e-way bill shall be generated by the transporter on the said portal on the basis of the information furnished by the registered person in part A. Where the consigner or the consignee has not generated e-way bill, see, there was third part of the question which says that if they have not generated e-way bill, then what are the consequences? So if the consignor or consignee has not generated e-way bill and the aggregate value of consignment of goods carried in the conveyance is more than 50,000, the transporter, except in case of transportation of goods by railways, air and vessels, shall in respect of interstate supply generate the e-way bill on the basis of invoice or bill of supply or delivery challan as the case may be, and may also generate a consolidated e-way bill on the common portal prior to the movement of goods. So in case if the supplier or the recipient has not generated e-way bill, even the transporter can generate it before the movement starts in case of goods carried by other than railways, air and vessel. Okay. Now what happens if the e-way bill is not generated? It is mandatory to generate e-way bill in cases where the value of consignment of goods being transported is more than 50,000 and it is not otherwise exempted in terms of Rule 138.14. If e-way bill wherever required are not issued in accordance with the provisions contained in Rule 138, the same will be considered as contravention of rules. And as per your section 122(1), a taxable person who transports any taxable goods without the cover of specified documents, that is your e-way bill is one of the specified documents. So in case a taxable person is transporting the goods without the specified documents, then what will happen? The person shall be liable to a penalty of 10,000 or tax sought to be evaded, whichever is greater. So the amount of tax evaded or rupees 10,000, whichever is greater, is the amount of penalty that will be leviable under section 122 to such taxable person. Then further it says, moreover, as per section 129(1), where any person transports any goods or stores or any goods while they are in transit in contravention of the provisions of this act or the rules made thereunder, all such goods and conveyance used as a means of transport for carrying the said goods and documents relating to such goods and conveyance shall be liable to detention and seizure. So what it says, that such conveyance along with the said goods is liable to detention or seizure. Next question. Okay. See, power, electricals. Okay. Power Electricals Limited, a registered supplier of air conditioners, is required to send from Mumbai a consignment of parts of air conditioner to be replaced under warranty at various client locations in Gujarat. The value of consignment declared in delivery challan accompanying the goods is 70,000. Okay. So, see, remember here the value of your consignment is exceeding 50,000. Okay. And what they are saying that this is not a part of supply. Why? Because it is a part of warranty. Okay. Warranty and not your supply. So, your movement is for reasons other than supply. Now, Electrical Limited claims that since movement of goods to Gujarat is caused to reasons other than supply, e-way bill is not mandatorily to be required in this case. Now, what our provision says that if the value of consignment is exceeding 50,000 and even if it is a transport other than by way of supply, then also e-way bill is mandatorily required. Now what the question says, you are required to examine the technical veracity of the claim made by Power Electricals Limited. So let's see the answer. See what it says. Okay. The goods to be moved to another state for replacement under warranty is not a supply. Okay. See what it is saying, that the goods to be moved to another state or for replacement under warranty is not a supply. However, Rule 138 stipulates that every registered person who causes movements of goods of consignment value exceeding 50,000 in relation to a supply or for reasons other than supply or due to inward supply from an unregistered person shall generate an e-way bill before commencement of such movement. Okay, so before the commencement of such movement, that person shall generate e-way bill. Okay, then further, CBIC via FAQs on e-way bill has also clarified that even if the movement of goods is caused due to reasons other than supply, e-way bill is required to be issued. So this case includes your replacement of goods under warranty. So even in case you are sending the goods for reasons other than supply, including as a replacement of goods under warranty, even in that case, your e-way bill is supposed to be generated if the value of consignment is exceeding rupees 50,000. So, thus in the given case, since the consignment value exceeds 50,000, e-way bill is required to be mandatorily generated. Therefore, the claim of Power Electricals Limited that e-way bill is not mandatorily required to be generated as the movement of goods is caused due to reasons other than supply is not correct. Okay. This is not correct. Now, question number 7. What it says? Beauty Cosmetics Limited has multiple wholesale outlets of cosmetic products in Mumbai, Maharashtra. It receives an order for cosmetics worth rupees 1,20,000 inclusive of the GST leviable. So here your rupees 1,20,000 is your consignment value. From Prasanna, owner of a retail cosmetic store in Delhi. While checking the stock, it is found that order worth rupees 55,000 can be fulfilled from the company's Dadar Mumbai store and remaining goods worth rupees 65,000 can be sent from its Malad store. Both the stores are instructed to issue separate invoices for the goods sent to Prasanna. The goods are transported to Prasanna in a single conveyance owned by Radhe Transporters. You are required to advise Beauty Cosmetics with regard to issuance of e-way bills. So we have seen that for issuance of e-way bills, you have to check the individual separate invoices. Okay, so see, my invoice of 55,000, that is exceeding my value of 50,000. My invoice of 65,000, again it is exceeding my value of 50,000. Okay, so I'll have to generate e-way bill for my 55,000 goods and also for my 65,000 goods, irrespective of the fact that I am sending both the consignments in the same vehicle. Okay, see what the question says. See, Beauty Cosmetics Limited would be required to prepare two separate e-way bills. Okay, it has to prepare two separate e-way bills. Since each invoice value exceeds rupees 50,000 and each invoice is considered as one consignment for the purpose of generating e-way bills. So, for whatever consignment that you are sending, you have to check the value of individual consignment. It should be exceeding rupees 50,000, and for each consignment, you are supposed to generate an e-way bill. Now further, the FAQs on e-way bill issued by CBIC clarify that if multiple invoices are issued by the supplier to one recipient, that is, For movement of goods of more than one invoice of the same consignor and consignee. So your consignor is same, your consignee is same, but since you have more than one consignments, then multiple e-way bills have to be generated. So for each consignment, you will generate a separate e-way bill. In other words, for each invoice, one e-way bill has to be generated irrespective of the fact whether same or different consignors or consignees are involved. Multiple invoices cannot be clubbed to generate one e-way bill. So for each invoice, you will have to generate one e-way bill. You cannot substitute one e-way bill for all your invoices involved. Okay. However, after generating all these e-way bills, one consolidated e-way bill can be prepared for transportation purpose if goods are going in one vehicle. So you are mandatorily required to generate each e-way bill for each of your invoices, and if suppose all your consignments are going in one vehicle, then you can, after generating the individual e-way bill for each of the consignments, you can generate one consolidated e-way bill for the transportation purpose. I hope this was clear, and if you have any doubts, you can feel free to reach out to me in the comments below, and you can also join the Telegram group given in the description. Okay, and if you have any feedbacks for me, please feel free to reach out. Thank you. Have a great study session ahead. Happy studies. Take care. I shall see you in the next video. Till then, study well.